Hello, today we're issuing our autumn report on the Irish housing market. In this edition, we have a particular focus on looking at demand and supply in the housing sector. To this end, we've looked at the latest forecast from the Central Statistics Office, which suggests that the population of Ireland will rise to 5.9 million people by 2036. Taking that forecast, which is based around very robust assumptions on the natural increase in the population and migratory flows, we've also assumed that the average household size in Ireland will fall from the very high levels which it has remained at for the last number of years to average 2.3 persons per household by the end of the forecast period in 2036. Extrapolating from both of these, we see an average annual housing need for about 56,200 units every year over that forecast period. And indeed, in the immediate years, in the next 3 to 4 years, we forecast a housing need for about 62,000 houses a year to cope with the latent demand because of the undersupply of housing over the past decade. Now, this very robust levels of demand competes with the supply of 32,700 units completed in Ireland last year. And indeed, if we look at output levels for 2024, there were just over 12,700 units built in the first 6 months of this year, which was down over 8.5% of what was delivered last year. So our assumptions at this moment is that output delivery for 2024 will be largely in line with 2023, somewhere in the order of 32 or 33,000 units, which is about 30,000 less than the immediate need in the housing market. As such, it's not surprising that the market has endured a further acceleration in the pace of house price inflation. Our latest figures show that the average values in Ireland rose by 1.8% in the most recent quarter to the end of September, which brings the annual house price inflation to 6.6% across the country. Now, this compares to growth last year in the same period of about 3%. So in other words, house price inflation has doubled over the last 12 months. For Dublin, we see house price inflation again of about 6.6% in the 12-month period, but this compares to only 2% in the previous 12-month period, so a trebling of house price inflation in the Dublin market. Therefore, there's no doubt that we urgently need a very rapid increase in the level of houses that we're building. But that can only come about by a significant increase in private investment in the marketplace. Indeed, this was reported by both the Central Bank and the Department of Finance in recent reports on the housing sector. If we don't see that significant increase in private investment, we will see further inflation, both in terms of prices and in terms of rents in the years ahead, which will erode affordability. And any erosion in affordability is going to put increasing pressure on the social and affordable sector. So it is imperative that output levels are increased very significantly over the next number of years. In terms of house price inflation in the immediate environment, we do expect to see a further acceleration in terms of house price growth over the remainder of this year and indeed into next year. There's now every likelihood that we will push towards double-digit house price inflation in 2025. But thereafter, assuming we see a very significant increase in output levels, we should see greater stability in terms of price.